Good morning, everybody, and welcome to On the Open here in the United States. Taking a look at all of the equity markets here in the good old US of A. It's been quite an active morning already after what was an amazing day yesterday. Currently, you have right now the major indices just slightly in the red. You have the Dow Jones trading down 12 points at 19,841. I'm looking at the futures, and yes, we did see the comp get as close as 44 points away from the ever so important 20,000. The Russell 2000 futures are trading down $4.10 under some pressure early. These small caps are trading at $1,382.40. You're seeing that the NASDAQ composite is actually in the green. This is the silver lining right now on the open, up 550 at $4,939. You're also seeing the S&P 500. Taking a look at the March E-minis, they're trading down 2.5 off of their worst levels this morning, trading at $2,261.75. You have crude contract trading up 42 cents. Crude has been moving to the upside at 53.68. You also have the dollar down 68 cents. The dollar has fallen overnight pretty dramatically at 102 and 2 cents. And you have copper pulling off of its best levels. I watch copper. It's trading at 255.35. Want to see that one? Gives me a little bit of that canary in the coal mine kind of feel. If I start to see copper start to get weak, that could basically be an indication that this growth that we're anticipating from some great PMIs, well, that might be a little bit tempered, especially after the dovish statements that we heard from the Fed yesterday. What is moving right now on the open other than the major indices? Well, let's take a look. You had some retailers that were coming out with earnings yesterday as well as same-store sales. What's notable based on earnings, Barnes & Noble had good earnings, good comps, up 6% this morning on the open. You have Children's Place, PLCE. Barnes & Noble's, by the way, is BKS. Children's Place, PLCE, up 2%, again, after good guidance and comps. And their earnings were solid. Where we did see some weakness is some traditional bricks and mortar. Kohl's, KSS, down 15% right now. Macy's, down 11%. That's ticker symbol M. And L Brands, ticker symbol LB, down 5%. All three of these were reporting these comps. They weren't good. That is tempering what was expected to be a pretty red-hot session and season for this sector. Now, we did have some warnings early in late to mid-December. Stores like Finish Line, Foot Locker, and so forth were reporting that foot traffic was a little bit lower. So I'm not too surprised on this. We're going to see how this impacts the sector. Also, we've seen that on the open, United Airlines, ticker symbol UAL, is down about 2%. After a downgrade. You're also seeing that a lot of these airlines have been they've been releasing their passenger loads from December over the holiday. So you can clearly see that Macy's and Kohl's have been somewhat of the rally dampener after yesterday's move. Some might call it even a buzzkill. But, this is just maybe a little bit of a red flag. Keep aware of what's going out. Now, what's the implications of the fallout of these two earnings? Well, let's take a step back and look at that. I think it's important. After you report all of this stuff, what are really the implications? Well, first of all, you could see that these market participants, specifically these department store retailers, they're dealing with their own set of issues, whether it's they're unwinding properties, whether they're trying to compete with the online, and also the fact of the matter is that they may not be broad enough, some of these stores. Now, Kohl's, they're pretty broad. Macy's, pretty broad. L Brands may have some challenges there. But what is positive, though, even for these bricks and mortars as they start to tighten up their approaches, is the fact that we're seeing global growth, and we can't forget that. The encouraging services PMI readings out of Asia and Europe so far really should be an up boost for these bricks and mortar and for their broad product offerings. the other thing is to look at the economic data that's come out here with the jobless claims. That's a positive. There's quite simply just too much of a strong bullish undercurrent in the overall broader market that is going to pull down just because of these poor earnings, the general market. The other thing is that we're starting to see the bump in oil. That was coming into question, and as I said last night on the closing bell, watch the API, the American Petroleum Institute. The inventory report came out and said that there was a 7.3 million barrel drawdown in the crude inventories. There also keep an eye at 10 a.m. where we're going to have the EIA report. Let's see if, at 11 a.m. we're going to see if they also report a draw. You're also seeing some M&A activity that's keeping this market moving in the positive direction and holding it up right now this morning. You see Gartner, IT buying CEB. You're also seeing, and that was about a $2 billion in cash and stock. You're also seeing in this sector in retail, Black & Decker, SWK, they acquire Craftsman's brands from Sears Holdings. And again, Sears Holdings cleaning up their books, removing properties. They just sold this brand basically for about $900 million. So SHLD has been looking for a suitor for the Craftsman brand, and they got Black & Decker to purchase it. So again, you see all these reports. You see the fact that that we had the private sector growing at about 153,000 jobs. Now, yes, that was a little bit less than what was expected, but you have the initial claims coming in decreasing by about 28,000 at 235,000. That's basically the best levels that we've seen in this reading, with no real special factors driving it in almost 43 years, right? The continued claims, they increased by 16,000, but still well within lines of expectations. So all in all, the market looks like it's beginning today on a lower note, but it's not as negative as you might want to spin it after you see the reports out of Kohl's and Macy's. I think right now you're not seeing the mentality that I have to run for the exits type of mentality for investors. So we're going to keep that in context as we go through today's action and watch all of this very closely. All right, folks, speaking of that, I'm going to be back on at 1:30 Eastern time at Strategy Now. We'll cover this in more detail, some of the strategic approaches that you should be looking at, some in specific sectors, as well as maybe some stocks, give you some transparency as well as some base so that now you can look at your portfolio and make more transparent, empowered decisions. All right, folks, we'll see you at 1:30 Eastern time on Strategy Now. Till then, thank you for watching MarketStream.live and have a great day.